Hey guys, thanks for coming back for another video. Remember, give me a thumbs up if you like my videos, subscribe to my channel, hit the little notification bell so that you're made aware of any future videos that we release. Today I want to talk about the monthly limit of indemnity on business income insurance, which is becoming more prevalent now as policies shift from the standard or preferred market to the surplus lines or the non-admitted market, as some people call it. You may be used to having a business owner's policy or even a commercial package policy in the standard market where you're used to seeing ALS, actual loss sustained, for your business income insurance. That will go away if you have to shift the policy out of the standard market into a non-admitted carrier, surplus lines carrier. I talk about ALS. I'm not going to go too deep into it today. It really doesn't have much to do with this video, but on the blog that I posted just a couple days ago and on the article I posted on LinkedIn, I talk about ALS. I give 7 reasons why ALS is the most beneficial for anyone's business income protection. But today, let's talk about monthly limit of indemnity. Now, I just finished moving a few clients over from standard markets who non-renewed them because of the challenging marketplace, especially here in California. Other states may be experiencing the same thing, such as Texas and Florida and New York. But in California specifically, we are seeing a lot of carriers non-renew property policies. Why? Well, age of buildings, age of structures, lack of updates, certain industries that present higher hazards for loss or higher risk for loss than others. So I just finished moving a client from the safe and sound protections of a BOP or business owner policy where they had actual loss sustained for their business income into a surplus lines market because that's all we could get. Building was built in 1901. They have people living there. It's a high hazard type of situation as an apartment community. And we moved them into a policy that has 1/3 monthly limit of indemnity. Well, what does that mean? And how do you determine what monthly limit of indemnity is right for you or your business? And how do you calculate what the recovery would be if you lose income due to a covered peril at your location or at your business? Monthly limit of indemnity normally comes as 1/3, 1/4, or 1/6. Well, what does that mean? 1/3 means that it will pay for 3 consecutive months of loss, 1/4, 4 consecutive months, 1/6, 6 consecutive months. And you're probably asking, well, what amount did we get paid or what amount did we recover? It depends on the limit. So let's say, for example, the limit is set at $120,000. On a 1/3 monthly limit of indemnity, it's going to be $40,000 for 3 consecutive months. On 1/4, it's going to be $30,000 for 4 consecutive months. And 1/6, it's going to be $20,000 for 6 consecutive months. So how do you determine what's right for you? Well, business income worksheets are important. In this case, pretty straightforward. My client was trying to protect themselves for loss of rents. Let's say there's a fire at the building, people have to move out. They're down for 3 or 4 months to get the building back to working conditions or back to condition where people can move back in and pay their rent again. They wanted to make sure that they recovered their monthly rents so that they didn't lose any revenue. So now let's calculate and see how an example could work. So let's use $120,000 as the business income limit. Let's use 1/3 monthly limit of indemnity to show how this will work. So let's say in days 1 through 30, the client loses $50,000 of revenue. Let's say day 31 through 60, the client loses $40,000 of revenue. And let's say days 61 through 90, the client loses $20,000 of revenue. Okay, so day 1 through 30, the policy is going to pay $40,000, which means that the client's going to be short $10,000 on their loss. Okay, day 31 through 60, the policy is going to pay $40,000, which means that the client's going to be even. And then day 61 through 90, the policy is going to pay the $20,000 that the client loses. Key point of emphasis here. You can't take the $20,000 in the last month in that day 61 through 90, the $20,000 that would have applied because it's $40,000 per 30 days, and apply it to the $10,000 that the client's short in the first 30 days. It doesn't work that way. The monthly limit is going to be $40,000. Okay, so it's going to be $40,000 for days 1 through 30. The client lost $50,000, they're down to $10,000. They're even on the second set of days, the second consecutive 30 days, and in the third consecutive 30 days, they have more coverage than they need, but you cannot apply that overage to any other month or any future months or any past months where you didn't have enough coverage to cover your loss. So that's how the monthly limit of indemnity works. Again, I wrote a blog on our website about this. You can read more. You can see an example. I based my example on the blog on $150,000 on 1/3 monthly. But remember, 1/3, 1/4, and 1/6 is what to look out for. Check your policy. It's really very important now that you understand the monthly limit of indemnity, especially as the market continues to challenge and we're moving into the surplus lines marketplace, non-admitted carriers, or even from BOPs to commercial package policies. By the way, monthly limit indemnity is instead of coinsurance clauses or another form that carriers use for their business income coverage, even their business personal property coverage. But this is instead of coinsurance. I do speak about coinsurance in other videos on my YouTube channel and also in other blogs on my website. So remember, visit our website, visit our blog. People love our blog. You can search our YouTube channel for any videos. And if you have any questions about any of these conditions or any of these forms in your policy, especially the monthly limit of indemnity, you can email me directly at mike@foagency.com. Happy to respond to any emails you have. Fill out the form on the bottom of our blog about the monthly limit of indemnity, or comment here on this video. I respond to every single comment. Happy to answer your questions. And please remember, give us a thumbs up if you like the video, subscribe to our channel, and notify yourself for any future videos that we may release. Thanks again for watching. We appreciate your time. Hope it's helpful, and we'll see you again soon.